All right, welcome back. Thank you so much for staying with the program. You're watching Morning Cafe. Let's shift gears now and talk matters business. And the safety of our money in banks is something that most of us take for granted, really. But what happens when banks fail? What happens to your money? And that is the conversation you had to have this morning. And at the center of this all, there is a corporation, and that is the Kenya Deposit Insurance Corporation, KDIC. And the agency is mandated to protect depositors, that is you, enhance financial stability, and of course manage bank resolutions when institutions face distress. So you can rest assured that it's very much possible to still get your money if in any case a bank fails. With me in studio I have the CEO, Mrs. Helen Chepkwony, that is the CEO Kenya Deposit Insurance Corporation, and of course the Director Deposit Insurance and Bank Surveillance, KDIC. Welcome to Morning Cafe, ladies and gentlemen.
Thank you, Anne.
Thank you. All right, I want us to set the pace for this particular conversation. We're talking about KDIC, but break it down for us, your mandate. And as we come to 2025, this is an act that came about in 2012. Then how are you doing so far as of 2025?
Thank you, Anne. Kenya Deposit Insurance Corporation is a state corporation that was set up to protect depositors. And our main mandate is that of providing deposit insurance for the depositing public. We have all the banks and microfinance institutions who are our members, and therefore all banks and microfinance institutions, the 53 of them, are our members. And we provide deposit insurance by ensuring that all the depositors of all those banks are covered, and we have a protected amount of 500,000 Kenya shillings. Our other mandate is provide prompt payments or prompt resolution if in case of a bank failure. And there are, at the moment, we have 19 banks that have failed over the last 30 years that we are paying the depositors their what we call payout, dividend payouts, after their protected payments were done. Our third mandate is what we call risk minimization. We try to minimize banks from failing as we do our work to make sure that these banks that are the 53 of our members are made to do their work well so that they do not fail. So much of our efforts right now is in that area of risk minimization, and I've come with my colleague who is the director responsible for that docket to ensure that we are undertaking early detections and timely intervention of those banks so that they do not fail.
So has that mandate changed since 2012, if you're looking at it, and how has it changed, if you can just break it down for us?
Yes, so since 2012, when the KDI Act was put in place, before that, we were called Deposit Protection Fund Board. And in that, we were a department of the Central Bank of Kenya, and our main mandate was just liquidation. The Central Bank of Kenya would appoint us as a liquidator. And all we used to do was what we call a pay box. We used to only make payments to the depositors. With the enactment of the KDI Act 2012, an extra mandate was given, that of risk minimization, and we were made a resolution authority. In this now, our expanded mandate ensured that we also participate in the risk minimization or the prevention of bank failures. Yes.
All right, let's bring in the director now, that is Mr. Paul Manga. What do you do exactly in your directorate, your day-to-day? When we talk about this bank surveillance, you're the director there, then what is your day-to-day activity?
Thank you, Anna. The CEO has said that one of our key mandates as KDIC is what we call risk minimization. And then the second one is deposit insurance. So as a director, I'm responsible for two mandates. One is deposit insurance, which deals with the payout. We have a fund that we normally manage to ensure that in the event of a bank failure, our guaranteed protections comes out of this fund. But then the most important proactive mandate, which the CEO talked about, that is the risk minimization. This mandate, we have a couple of layers that we have put in place to ensure that we proactively manage the risk of bank failure. We appreciate the fact that when a bank finally fails, you know, the cost of the failure is sometimes, you know, too much. So if you can, we can find, if you can prevent that failure from happening, then it becomes the easiest way. It's a way of, like, you know, preventive measure other than, you know, curative measure. So what we normally do is that we have an early warning system which we've developed to make sure that anytime there is a distress in a bank, we're able to early identify that or detect that problem before actually the bank gets into a bigger problem. Then from that, there is what we call timely intervention or prompt actions which can be taken to ensure that sometimes this problem could be a very small problem, but because you delay in identifying the problem, detecting that problem, it manifests to a very big issue which can lead to a bank failure. So in our day-to-day basis, what we do in KDIC and in bank surveillance is that we will look at the data that we normally receive from the banks, do a lot of analysis on this data using our early warning systems to ensure that we're able to see if there is any misalignment or any early symptom of a bank undergoing through a distress. So once this has been identified, then we'll move to the next level of engaging the bank, getting to know what can be done and where the problem is. And then we believe that this is a proactive way of managing the risk. And by so doing, we've been able to ensure to minimize the risk that banks experience. Thank you.
So is there priority to protect depositors or preserve the banks?
Thank you. And I think you cannot separate the two. The depositors have their money in the bank. So when the risk, how does the risk of depositors crystallize? The risk of depositors crystallize when a bank fails. So if there is no bank, so if you want to wait until the bank fails, then you protect the depositors, it's normally too late. So what we are doing is that this is a proactive way of protecting depositors without getting a failure. Thank you.
All right. And CEO, I know we're talking about deposit insurance, but there might be confusion here between deposit insurance and the conventional insurance that, you know, we're used to. And just to break it down for a viewer, the concept of deposit insurance in details and how different it is from the conventional insurance.
One of the difference I can mention is that in deposit insurance, unlike the conventional insurance, like a car insurance or a life insurance, is that deposit insurance is more or less protection, deposit protection. And the main purpose of this is to ensure that we have financial stability. And therefore, we do not have because deposits change over time. Your deposits today would not be the same amount next week. And like when you are insuring a car, you have a fixed value with an interest. So in deposit protection, we are looking at an overall view of deposits within the system. So more or less, we are not like a normal insurance. And therefore, our job is mainly to bring about protection. The name is somehow a misnomer. In other jurisdictions, they are called deposit protection boards or deposit whatever, but our name is Kenya Deposit Insurance Corporation, and that has brought some small difference. And on the other side as well, we also insure, because the banks pay us premiums on an annual basis, and that premium is what we use to build the fund. This is the fund that we use in case of a bank failure. That's the money we use to pay the depositors. In an insurance setup, you pay your premiums. If in case you have an accident, you'll be paid up to the level of your amounts. For us, we have a base already.
So in simple terms, with conventional insurance, the people pay for insurance, but with deposit insurance,
it's the bank
that pays.
Exactly.
Great. I want us to now go back to the point that you made, that the insured limit is currently capped at 500,000 Kenyan shillings. I don't know if this has increased since 2012, or has it been reviewed anytime soon, CEO?
Yes, our current protected amount is 500,000 Kenya shillings for each of the depositors, and this covers over 99% of all our account holders in the country. Yes, we are in the process of reviewing the coverage to ascertain the optimal level, whether we are within the optimal levels of that coverage. The consultant will come up with a number. Maybe they might say what we currently have is still sustainable, or they might recommend for a review upwards. So we are still in that process right now.
How much are we looking at? Maybe if you can comment on that, Director.
I think, thank you. The CEO has already alluded to it, that we have a consultant who will look at it, because this is a figure which we don't just want to give based on our feeling, but we want a figure which will be supported by data and statistics. So as it is right now, we want to wait until the consultant is done through with the job so that he can tell us. Because there are factors that are basically considered. One of those factors is that how much fund do you have that you're able to support the promised payout. Number two is that what are the number of people that you are covering, because if you increase the limit, how much people, what are the number that you are targeting to cover. Right now, the CEO had already mentioned that we are covering a big chunk of the depositors, almost 99% of the accounts. So these are some of the factors that are normally considered when you are reviewing. So we do not have a number as we speak right now, but we'll actually wait for the consultant to go through the job. Once it's done, then we'll look at it and then make an appropriate decision that time. Thank you.
You talked about that you look at indicators before, a bank is in a place of crisis. Then what are the indicators that you detect, or instability, that you used to detect instability before a bank really just dropped to a point of, I don't know if you can say that some dropped to a point of no return, really, and you'll tell us that if that's something that has happened before. But what are these indicators that you use to detect instability?
Thank you, and sometimes it's very tricky to go live on those indicators because of the way depositors perceive it and the public. For avoidance of any miscommunication, we always keep that one. Because if I say this is the indicator, then tomorrow someone says, oh, even my bank appears to be having this one. So you can guess what normally happens to unsuspecting depositor, which could actually run a life at the working bank. So for purposes of, making sure that we do not want to cause any, run in the market, any suspicion in the market, we always prefer that those indicators are kept confidential because of the perceived perception of the public out there. The moment you say that this is what we look at, then people go and misinterpret the same. And, banking sector is a very delicate sector. And it's important to mention that those things, we keep it under the carpet so that, because of the fear that people can misinterpret it and do something that you do not want to talk about. Maybe the CEO, you want to?
Yes, yeah, but we can assure the public that we have certain indicators that we monitor on a monthly basis. We receive data from all the banks and microfinance institutions licensed by the Central Bank of Kenya, and we monitor the certain aspects of it, and we profile these institutions and monitor how the trend on how they are moving. And some of the general risks they are looking at are credit risks, the liquidity levels that they are having, those things that can show the financial health of an institution, their non-performing loans and all that kind of things that we can generally mention that we monitor. And therefore, those are the things that keep us maybe visiting them and asking, how are you doing in this area? What are we doing about it? And we consult widely. And the regulator is the Central Bank of Kenya. They are the ones who physically monitor them much more. But as a deposit insurer, because our fund is at risk, we have an interest in how they are performing. We, as much as possible, trying to prevent them from from coming to our side. Yes. Yeah.
But when you talk about sometimes you try to, throw this under the rug such that the public will not get scared with everything happening in their banks.
Yes.
Another question would be when them knowing what happens create more awareness and, just give them the red flags that they should be looking out for in terms of being self-aware and also knowing your mandate as KDIC, knowing that you exist and that you're there to protect them.
Thank you. Yeah, it's true that our interest is also to have the public getting to know what happens around their institution where they put their money. But then, as the CEO has already said, that there are those general performance indicators that every person who puts money in the bank will, and wants to know will know. For example, let's say that the bank, the profitability which banks make, this is in the public domain. Every other 3 months, banks normally publish their accounts, and every Kenyan is able to see the loan book. If you were to look at the balance sheet of any bank and you have some level of knowledge of the financial management or financial analysis, so to say, you're able to quickly see this bank is performing well or this bank is not performing well. It's not really any magic. Maybe ours is that we normally track for quite some time consistently, and then we also have some trigger levels that yes, even when you are performing well, there are certain levels where you reach, and then we say maybe there is a cause for alarm. Just if I was to give you an example, for example, if you go to the hospital and then the doctor takes your temperature, there are those temperatures will be told, no, this one has reached a trigger level. There are others which is just normal, that you could just take some water there and then all things will be well. So maybe because you've been running and so forth. So the same thing to the banks. We have a model that we normally use to measure their performance and their healthness. So using consistent data for quite some time, we're able to tell that when you reach here, you've reached a trigger level where maybe we need to engage and ask, could there be something that is happening and what can be done? Yeah.
All right. I would love for you, CEO, to address the issue of the bank in the event of red flags or distress. Do you as a KDIC intervene immediately, or do you refer these issues to the CBK to deal with them?
Thank you. Yes, in terms of resolution, we have a very close collaboration with the Central Bank of Kenya. So most of the time when the bank is healthy, as he has mentioned, when everything is okay, there's the normal information sharing and all that is under the Central Bank. It is usually now when there's a sign of high temperatures or something else that has been found that closer collaboration is required. Most of the prompt corrective actions are undertaken by the regulator, the Central Bank of Kenya. We as KDIC also participate in our risk minimization mandate. We participate in following up with these banks to just make sure that they don't fall within the trigger levels. So the action is undertaken by the Central Bank. It is the Central Bank which can appoint KDIC when that level, the trigger level, has been reached, and when an institution is determined whether to be placed in receivership or in liquidation. Yes, but we participate in it in the whole process. And sometimes, while the bank is still in operation, we can undertake some resolution options that can make that bank be strengthened and continue in their
So it's teamwork.
Yes.
I would love for you to also address the issue of the 500,000 insured limit, the 500,000 Kenyan shillings.
Yes.
And somebody may now wonder, say if I lost or I had 100 million Kenyan shillings in my bank,
yes,
then do you give them only 500,000 Kenyan shillings, or can they just get that 100 million Kenyan shillings in total?
So, if you had 100 million Kenyan shillings, the first protected amount of 500,000 is paid from the fund. Yeah, we mentioned that we built a fund that is through the premiums that are paid by the member institutions. And this is the fund that is used to pay the protected amount. Thereafter, we go into the liquidation process and we undertake recoveries. Now, because most of the monies, when a bank is in operation, they lend out. They take other people's deposits and lend out to the debtors. So when a bank fails now, we recall these debts to come and make arrangements and to pay their loans or transfer these loans to other banks, and in the process receive the recoveries. And that is the money now we pay over and above the protected amounts. So in some instances, we can pay 100. Some banks, we have managed to pay the 100% of their deposits, but over a period of time. But others, we are at the various stages of paying them. It continues. It's not a one-off thing. The first thing we do in the first week is to pay the protected amount, and thereafter now we go pursuing recoveries.
All right. When I think one that is very well known is the Chase Bank when it failed then. And by that time, there was a lot of concerns around how it delayed with the legal processes before people were able to get their monies. Then has that changed as of 2025, such that there isn't much that goes into the legal processes, that it's just easy peasy in terms of the processes that goes into somebody getting their money? Director.
Thank you. I think, Anna, it's also important to mention that just to add on what CEO has said, that we normally pay the remaining amount from the recoveries we make. That Chase Bank is a good example. That we also use another option which we call, alternative resolution options, where you don't really have to go and pay the final protected amount. For example, what happened in Chase Bank is that we transferred the depositors together with some certain asset to a live bank. And that way the depositors got 75% of their deposit. The guy you talked about, 100 million, quickly got 75 million transferred to another bank where he will access his 75 million. So he's only talking about maybe the 25 million remaining the balance. But you've asked a question about the delayed payment. The case of Chase Bank and many others which we've had, normally those delayed payment comes from outside. It's not necessarily from KDIC. People, depositors or other interested parties go to court, and then the court puts an injunction that this process needs to be, put on hold, and so forth and so forth. So in the event that a Kenyan has gone to court, there's nothing that we can do. And we've been experiencing all those, and most of those cases that you've seen around where the resolution or the liquidation or the process is delayed is largely because there is a court case. A court has issued orders, and we cannot go against the court orders in this country. Those are the main issues that you normally, because anytime a bank failure, there are interested parties. Maybe these parties who are party to the failure of the bank, they will not want the process to be quickly, concluded. They will try as much as possible, do whatever they can do to make sure that either they have their way or so forth, and that is what makes the whole process delays. I know even right now there are some institutions where we've been having a lot of court cases. We even went to liquidation, and then we started paying depositors, and then still someone went to court, and the court issues orders. So the moment the court issues orders, then that process, there's nothing you can do, because it's a court order. The guy comes with a court order.
All right. CEO, maybe I know directors say there's nothing that you can do at all if this is something that is with the courts. But as KDIC, now that you're at the center of the depositors and the banks, are you perhaps pushing for a framework that allows you to help these depositors help fast track this process, such that giving them their monies won't have to take a lot of time?
Yes, thank you. We are continually reviewing our laws to ensure that they are robust enough to support us in the whole process. And therefore, what we are looking at are the laws that really safeguards or ensures that once we are in resolution or a bank is in liquidation, the depositors are safeguarded from either being stopped from receiving their payments. Yes.
Oh, all right, great. And Director CEO mentioned about the depositors insurance and also the conventional insurance when she was giving us a breakdown.
Yes.
But now the deposit insurance fund relies on banks' contribution specifically. And the question I would ask this morning is, are the banks complying with that?
Thank you, and I think it's important to mention that one area where we have a lot of compliance is the banking sector. The banks actually comply when we, normally the process is that we will issue the banks a notice or an invoice, so to say, in the month of July, end of July, and they are given 21 days to comply. From the day of the notice, you are given 21 days to comply. So I can confirm that they comply within 21 days because failure to comply attracts a very heavy penalty, which no bank will want to enter into. And the other thing is that, if they don't comply, that means they have not insured their depositors. They've not taken insurance for their depositors. And just like any other insurance, even if you are in yourself, if you've not taken insurance for your car, it then means that car has to be at home. It cannot go to the road. So same thing to the bank. If they've not taken insurance for their depositors, it means they cannot open. So the compliance issue, we've not experienced it. It's not an issue. It's not debatable. It's a question that you've given the notice today, you count down of 21 days, and all the banks will have made the payment. The other thing which maybe I want to add on that, over and above the premium which we normally get from banks on annual basis, we also invest this fund. And when we invest in this fund, we're also able to generate some income, which also used to grow the fund. We have had instances where people normally ask, where do you invest this fund? Where do you bank the fund? What if this bank fails? It's important to mention that we bank this money in central bank. We don't bank this money in any of the commercial banks. We invest in government securities, because our investment objective is security comes above everything else and liquidity. So we make sure that the fund is invested in a way that it's safe, and also in terms of liquidity, if we want that money within the shortest time possible, we're able to get it. So those are some of the safeguards which we put to the fund to ensure that it grows and also ensure that it's liquid and it's safe. Thank you.
And the question now that I would have asked before, CEO, is that what does that money do before now you can give it out to depositors? And Director, I know he's talked about you investing in the government, and I believe that is with treasury bonds and treasury bills, right? Yes. So are you investing it all, or are there some that you just put aside in case of anything?
Our fund is managed in a way that we only take what we need, maybe on a weekly basis, to meet our operational costs. But most of the money is invested, and therefore we can say that because we have staggered it over a period of time, almost on a weekly basis we have maturities that are happening, and therefore we can keep some of it, even in case there is something that we foresee that we intend to pay our salaries, for instance, or any other operational costs that we incur. The rest of the money, 98% of it is invested.
Amazing. Director, take us through the process of verifying and paying out of depositors. Just how do you do it efficiently and also ensure that there's transparency with all this process?
Thank you, Anne. I think payment of protected depositors, or what we call reimbursement, is one of a critical role that we do in KDIC, one of our key mandates. Now, what we normally do is that once a bank has been placed in liquidation, it's important to mention that there are two stages. The bank, when it's first taken off closed by central bank, it may not necessarily go to liquidation. There's a stage we call receivership. Receivership is a temporary freeze where we are looking at whether this bank can be resuscitated or something else can be done. It's like an admission of a patient in a hospital. It doesn't mean that this person is going to die or something. It's just being under intensive care unit, ICU or IDU. So if it's after that is discovered, or things comes out that this bank cannot come back because of the damage that had already gone through and the problems, the distress levels and so forth, then that bank is placed in liquidation. So at the receivership, there are no payment. So that's very important. At the point of receivership, we don't make the payout. That is the protected deposit. But now, when the bank is declared dead, that is a stage we call liquidation. Under liquidation now, we normally do an advert informing the depositors of that particular bank that yes, we will now be making the payout of protected or guaranteed deposits. So how do we go about it? We have a standard form, what we call a claim form. So the depositors can go to our website, download that claim form, fill it. It has all the details which is required. You fill the details that is required in the claim form. Then attach some of the support documents. For example, say your ID, your PIN number, things that will help us ascertain that you are actually the true claimant or the true depositor of this particular account. So once that is done, it's now, we normally establish collection points where we will be guiding, even in our advert, where the depositors can take those claim forms. Then the claim forms will come to us through our collection point, and then we'll go through, our officers will go through the individual claim. Remember at that point, we also have the data of the bank, which we have now taken over. We'll compare the information that you've given against the information that is already in our disposal. We'll look at it, and once it has been validated that you are actually the true depositor with this amount, then you, in the claim form, you will have also indicated how you want your money to be paid. Maybe you've given us an alternative account number in a bank that is existing, is live. So we will do that, and it's something that doesn't take long, as long as you have fully filled the duly signed the claim form, attached the correct support document as guided. Then the other thing is we'll just disperse the money to your respective account. Yes.
Have you dealt with cases of fraud before when dealing with the reimbursement process, Director?
Yes, those cases are there. The issue here is that the validation process is capable of, identifying the fraud cases, because if I said that there are a couple of support documents that you have to attach before we can actually pay. It goes through various processes. So you see, for example, we have to attach your ID, you have to attach your PIN number, you have to attach the letter from an advocate, you have to attach a couple of documents. So all these documents are there because where there is money, there is a likelihood that there will be people who want to get easy money. So frauds are there, but we haven't gotten a scenario where we paid wrong depositors because our process is very robust. Thank you.
Where there is money, people would want to get it easy. Root of all evil for you. Also, I think we should have addressed the issue of payment. Now that you're talking about when the depositors are filing these claims, are they charged any amount, CEO?
No, there are no charges to any depositor filing their claims. And we are making it much easier for the depositors even going forward, even with the mobile apps that we have developed, that we are currently using mostly for them to pay those who had loans, they can pay, or we can also pay them through, I think my colleague has forgot to mention that we also pay them. If you give that you intend to be paid through the mobile app, we can be able to pay you easily, or you can tell us to transfer the money to another account. We do that. Yes.
And do you think Kenyans really understand what KDIC is and what you stand for? I know you've been here for over a decade, 12 years, a decade is gone. But do you think that we as Kenyans understand that, you know, there is a corporation like KDIC which is here for them, and such that they should not be afraid to deal with the banks and to just save their money appropriately? Have you been able to create enough public awareness?
Yes and no. Our public awareness are still slightly low. The last survey showed that we were at 32%. We would wish to have it higher than that, but we've come from far. We started at 9%, so we've made some strides. But the reason why we are here and many other platforms is that we are trying to increase that public awareness, because it is by people knowing of the existence of KDIC that they'll be able to be comfortable to put their monies in the banks. But without them knowing that there is somebody that is backing up that bank. So they will not be worried, even if that bank was to fail, they know that there is a fund that is supporting them, and they'll be able to get their money in case of a bank failure. So that is why we are pushing this, to have a greater awareness about what we do, our mandate, so that people are much more encouraged to mobilize their savings and put them in a bank regulated. Yeah.
And Director, there's also this concern that sometimes when money is put in the bank, I know you're championing for banks, but some say that when money is there in the bank, it sometimes depreciates in value. How do you address that particular concern to Kenyans in this day and age, such that, you know, they're not running to, how do we call it, traditional ways of saving, as I know you're against that, but the issue of money depreciating when it's in banks?
Thank you. I think, yes, there are people who think that, but we need to compare and say, what are the other option, investment option or saving option the person is talking about? Because if you are putting money in your house somewhere in a tin or in a pillow under the mattress or so forth, I don't know whether that money will earn anything as opposed to when you take the money into the bank. Because even when you take money into the bank, there are other aspects that you need to consider, because the bank has several accounts and banks offer different products. So I know, for example, you have a product in the bank which is the fixed deposit, you know, where you go there, you agree what will be the interest rate, and they will give you. So if, for example, you are putting money in the bank because you want to make a payment tomorrow, so the objective was you want to make a payment, a settlement, so that's why you went for a product which does not earn interest. So I think it's important to enlighten Kenyans that, yes, other than the bank giving security for your money, the banks also have products which will make your money appreciate. It's up to the person to go engage your respective bank and ask them, how can I put my money so that it's able to grow? So it depends the product that you picked. And I know all banks, all of them, they will give you a product that is able to grow your money. Yes.
How are you doing it to just restore public trust and public confidence? Because over time, this is something that has also gone down with banks and with all this I know right now you're dealing with microfinances, like you've mentioned before, but what are you doing to restore that public trust and public confidence?
Yes, so one of them is by improving on this mandate of ours of risk minimization, the early interventions and the early detections we are trying putting so much of our resources into making sure that these banks do not fail, because that alone increases the public's confidence in the banking system when we don't have a failure. So that is the first thing, and therefore the unfortunate thing is that it cannot be seen that you are doing something. It is only when a negative effect happens, that's when you are noticed, you know. Yeah. It's just like air. When you are breathing well, everything is okay. But when things happen that stops that is when you realize. So therefore, as a KDIC, we are trying to push that public confidence and putting more trust by ensuring that these banks stay well and they manage their risks. We incentivize them to make sure that their risk appetites are within manageable levels and therefore prevent bank failures. The other one is also by prudently managing this fund, because when the depositing public are aware that there is a fund that behind the KDIC that is huge enough that even if a bank was to fail, they know 99% of their accounts will be already paid off. They are full protected amounts. Therefore, even when they hear anything somebody says on those WhatsApp groups that remove your money from here and here, they are confident because they know even if this was to happen, I'll get back all my money from KDIC. So this is what we are trying to do right now, building trust with the depositing public to know that their money is safe in a bank.
You said bad news sells, even in in KDIC.
Yeah. Interesting.
So what would you say, Director, is one of the biggest misconceptions that we as the Kenyan people have about the KDIC? You know, when we hear about KDIC, about how you work as deposit insurance, what would you think is the biggest misconception?
Thank you, Anna. One of the biggest misconceptions about KDIC, I know when I joined KDIC about 7 years ago, that I managed to visit one of the banks and, you know, quickly people, you know, knew KDIC, that whenever KDIC comes into an institution, it is coming to close that institution. They will come with a padlock. So it has been, you know, as I know there are other places where people even likening KDIC with, you know, the mortuary and the morgue and the undertaker. So we have been working very hard to say that, look, we are partners. We don't exist to close banks, but we exist to support banks, you know, whenever they have a distress. This negative misconception has really affected, you know, previously affected the work of KDIC, but I want to say that that has since changed. People are now seeing KDIC, the banks who are member institutions are seeing KDIC as one of the partners in their businesses. When every single project which we've been doing, we've been working with them, we have received a very positive, you know, response and support and even partnership in terms of all the projects which we are rolling in. But it's important to look at where we are coming from. We are coming from an undertaker position where people thought that KDIC will just come to close a bank. They did not see the positive side that KDIC can actually come and support banks. So we've been even receiving banks coming to us and telling us, look, this is what we are doing, how can we partner, how can you help us, and so forth. Including even the coverage limit that CEO talked about. We are having a very open and a candid conversation with banks, and these are the people who are telling us that, look, this is how we like it to be, this is where we want to be, this is what our depositors, who are clients say, and so forth. So I think we are doing well.
Aside from the misconceptions that are holding you back as a corporation, what would you say are some of the challenges now that are hindering you from achieving your mandate at KDC? Director, I would want you to answer that.
Thank you. One of the challenges that we are facing, I think the low public awareness, whereby, you know, for example, we have right now declared the payout for 5 banks. but you realize that sometimes people don't know and they don't come to claim for their money. So we have declared the payment for Pan-Africa Bank. We have declared the payment for Kenya Finance Bank. We've declared payment for Middle Africa Bank. We've declared payment for Eurobank. And all this, getting the people to come, and we are basically saying, please come, we have money for you. You are depositor, your bank died, and we are able to pay you the money. But now those people have not either gotten the message, or when the bank was closed, they knew their money has got lost. So you see, that is lack of information. So these are some of the things which makes us not fully optimized in terms of our mandate delivery. Because if you have declared, if you want to pay people money and maybe those people are not aware, you cannot say that you have fully achieved what you wanted to do. And I think that's why we have been trying to partner with the different stakeholders, including TV47, to see whether this message gets to reach to these people, and this will help us deliver our mandate. Thank you.
Great. I want us, you wanted to comment?
Yes, I wanted to add that in addition to the challenge of low public awareness, is the long court processes that we undertake in our recoveries, because most of our debtors, especially for those banks that failed a long time ago, tend to go to court to prevent us from realizing their securities, and therefore it takes us quite a long time through the court process to be able to realize. And it is this money that we need so that we can pay the depositors. Because once we've paid the protected depositors from the fund, the rest of the money, as I mentioned to you, the 100 million you are talking, we've only paid them 500,000. So we have to aggressively follow up on the remaining of the money through the debtors, because most of that money was loaned to other debtors. So it is that process of recoveries that sometimes has been challenging, and therefore it has elongated our period of liquidation, because our next action is to wind up, and we cannot wind up a bank when we have not recovered fully and our depositors have not been paid their money.
All right. And this is so timely. I'd want for you to talk to us about World Savings Day on the 31st of October. And I wonder if our viewer actually know that there's a day like that exists in the global calendar. World Savings Day. How important is it for the people of Kenya?
So maybe I can start, and my colleague. Yes, today is a very important day, because as a deposit insurer, our job is to mobilize savings for the country by ensuring that we are supporting the banking system in receiving these savings, because economics 101 tells you that savings is equal to investments. We are supporting the government in trying to improve the investment environment in our country, and therefore bring about economic development. So by having more people put their money in the formal sector, in the formal banking system, we are able to support banks to be able to, banks are called financial intermediaries. They are able to change that little savings into a longer term lending. They are the ones who do the financial intermediation by making sure that they take the savings from the households, from individuals, and put them into longer term lending for investment purposes. Now, the big factories, manufacturers, and everybody else is able to borrow from there. Therefore, as KDIC, our job is to make sure that we support, to enhance that public confidence in Kenya's financial system by making sure that this money is put into the banking system. So therefore, on a day like this, ours is to tell the public that your money is safe in the banking system, in banks and microfinance institutions that are regulated by the Central Bank of Kenya.
All right. And Director, what are some of the barriers now that are hindering Kenyans from saving? The CEO is calling on people to save more, assuring Kenyans that their monies are safe in the banks. But a lot of Kenyans are still reluctant on taking this money to the banks, even as much as you're championing for it. Then what are the barriers? What is hindering them?
Thank you, Anna. I think one of the barriers that we are looking at is that maybe the confidence which now the CEO has talked about, and KDIC, that's our basic mandate. that you don't take your money where you are not sure about. I think in the failure which we experienced in 2014, 2015, where we had 3 banks which went down, and maybe other places where the people have been able to lose their money because in other financial sectors or formations, this confidence sometimes erodes, and including what you've said, that maybe people feel that when you put money in this bank, it's not growing and so forth. And that makes people start putting their money in some of the, amorphous structures, which they end up losing. And we are all aware how many people have been losing money or conned, that you can bring here your money and it will be multiplied 1, 2, 3, 2, 3, 4 days. People are even selling their properties. So what I want to say is that KDIC main responsibility is twofold. One is to ensure, to promote public confidence, create trust to that bank where you are taking your money. That yes, there is a bank here which is prudently regulated by the Central Bank of Kenya, but then there is also another layer of protection that surely anything slip through the fingers, you are still able to get your money. So it's a multi-level protection that we are put in that bank. So we are encouraging people that please trust our banking our financial system, trust our banks, and put our money there. Because when you save in a bank, there is more likely that this money is going to benefit another person. Today, if we were able to mobilize all the deposits, all the savings, and put it in a banking system, maybe even this country of ours will reduce the reliance we have in external borrowing, because we are able to borrow from our fellow citizens. So we believe that if we're able to mobilize our small 50 shilling, 40 shilling, 100 shilling, and put it in a financial system, and then the banks will do their magic of financial intermediation, where they can, package that small, deposits into a big syndicated loan, then they're able to finance our economy. So we will reduce the reliance that we have of borrowing from external parties, which comes with a lot of conditions and so many other things, including the foreign currency exchange rates. So our call to Kenyans is that please, let's trust our banking system. Let's put our money in the bank as opposed to in our other alternative places where we keep the money, which could be disastrous and which is not helping anybody else. Because if you keep your money in the room, if you keep your money in the pillow, in the mattress, and in a tin around there, other than the risk of you losing that money, that money is not helping anybody. But if you put that money in a bank, there are those people who say that the moment you give the money to the bank, before you get out of the counter, someone else is taking that money. You can see how that money, credit creation, is happening across. The money you don't need today, it doesn't mean that someone else doesn't need that money. It could really go a long way in helping another party or another person who really needs that money urgently, whereas you wait for a day when you require that money. So on a day like today, what we want to call to Kenyans is that please, let's not just save, but put our money in the banking system where that money is more accessible, can be used by other people. Thank you.
You've even given us your call to action already. So what is your call to action, CEO?
I don't know whether mine is a call to action, but I just wanted to add on the same aspect that under the Kenya Vision 2030, the target of our savings, gross savings, is around 30%. Currently, we are at around 13%. And therefore, moving from that 13 to 30 requires a lot of work. And the challenges that he had mentioned, there are certain challenges. Some of them are not within KDIC perspective, where people, the high poverty levels in the country, if people are not able to have enough to be able to save, then there is an issue. Maybe inflation, thankfully our inflation rates are low, and therefore the real interest that you are earning from your money is there, because when inflation is way higher than what you are earning, then it really waters down your need for for savings. And therefore, as we continue through the financial literacy and other products that we are coming up with, ours is to try to ensure that savings is mobilized within the country. And we are working with other stakeholders, the Kenya Bankers Association and the commercial banks who are our members, in trying to really put this out. That it's important for people to save, and especially the young people. The culture of savings needs to be inculcated even from high school level all the way, so that people learn the importance of saving. Because when you wait until you are 40 to start saving, it gets much more costlier to yourselves.
All right, and of course remember, tomorrow is World Savings Day, a day commemorated every 31st day of the month of October. That is Mrs. Helen Chepkwony, CEO, Kenya Deposit Insurance Corporation, and Director, Deposit Insurance and Bank Surveillance at KDIC, speaking to us about the mandate of this corporation once again, which is mandated to protect depositors, enhance financial stability and manage bank resolutions when institutions face distress. Thank you so much, ladies and gentlemen, for making time for us to have this conversation and for coming to Morning Cafe.
Thank you for having us.
All right.
Okay.
That brings us to the end of this conversation and to the end of this segment. My name is Anne Odida. Good morning.